This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices settled higher on Friday as geopolitical tensions in the Middle East more than offset a forecast from the International Energy Agency for slowing demand. Brent crude futures settled up 61 cents, or 0.74% at $83.47 a barrel. U.S. West Texas Intermediate crude settled $1.16, or 1.49%, higher at $79.19 with the nearby March contract expiring on Tuesday. The April contract rose 87 cents to $78.46. For the week, Brent gained more than 1% and the U.S. benchmark rose about 3%. The growing risk of a wider conflict in the Middle East supported crude prices.
Inflation-adjusted U.S. gas prices have fallen to the lowest level for over 30 years as a mild winter and continued production growth leave the market carrying a growing surplus of inventories. Front-month futures for gas delivered at Henry Hub in Louisiana slumped to $1.58 per million British thermal units on February 15, the lowest in real terms since the futures contract was launched in 1990. Working gas stocks stood at 2,535 billion cubic feet, BCF, on February 9, the highest for the time of year since 2016 and before that 2012, according to data from the U.S. Energy Information Administration, EIA.
Moving on to the top news in the energy sector.
Russia reduced fuel oil supplies via rail for further export by 1.2% in January from the same month a year ago and by 6.2% from December amid refinery outages, according to industry sources and Reuters calculations. Russia's energy infrastructure has been hit by drone attacks and fires in the past month, adding to uncertainty in global oil and gas markets already rocked by the conflict in the Middle East. The Baltic Sea port of Ust-Luga remained the main destination for Russian fuel oil, handling some 46% of total supplies.
The U.S. oil industry saw nearly $200 billion in upstream deals last year, but the refining sector missed out despite plenty of willing sellers as the energy transition away from fossil fuels accelerates and casts doubt over the long-term value of aging U.S. refineries. The growing number of operators looking to sell assets reflects the hope that a post-pandemic surge in margins, which for some products nearly quadrupled in 2022, might have opened up a rare window to exit assets profitably. Until very recently, margins were fairly high and owners might have begun to fantasize that they could get a very good price, said Garfield Miller, president of downstream-focused investment bank Aegis Energy Advisors. Next, we have the top news in metal markets. Australia classified nickel as a critical mineral on Friday, opening the way for the crisis-hit industry to access billions of dollars in cheap government loans, as its Prime Minister prepared wider policy support for the green energy industry. Australia wants to build a battery chemicals industry to reap more value from its mineral wealth, but the nickel sector is facing thousands of job cuts after a jump in Indonesian supply saw prices plunge 40% in a year. The international nickel price is forecast to stay relatively low through 2024, and likely for several years to come until the surplus of nickel in the market is corrected, Resources Minister Madeleine King said in a statement.
Copper prices climbed on Friday on track for their largest weekly gain in 11 months, helped by falling inventory and expectations of more economic support from top consumer China. 3-month copper on the London Metal Exchange had gained 2.1% to $8,488 a metric ton at 16:56 GMT. Prices of the metal used in the power and construction industries are up 3.9% so far this week, the highest weekly rise since March last year. Earlier in the session it hit a 2-week high of $8,495.50, breaking through major technical barriers including 21-day, 50-day and 200-day moving averages, in what traders said was subdued trade due to China's Lunar New Year holiday.
We will now look at the top news in the agricultural sector.
Brazil's largest farm cooperative entered 2024 with grain stocks over 50% higher than in 2023, driven by a bumper crop last season and sluggish farmer selling, Como's president Ayrton Gallinari said late on Thursday. The situation reinforces that supply pressure could continue to weigh on grain prices and dampen farmer sentiment in Brazil, the world's biggest soybean exporter and producer and a major corn exporter. Coamo, based in Paraná State, reported carryover stocks at 3.66 million metric tons, including soy, corn and wheat. The volume represents more than 36% of the total of nearly 10 million tons received by the cooperative last year. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.